Hey everyone, today I'm going to be walking you through my value-add multifamily financial template. This is a free template and you can check the description to find out where to get it. I'm going to go through this model tab by tab. It's not a full comprehensive model that I typically build for my clients, but it has the basics that you need to get going. If you need any financial modeling help, I list my financial modeling services on my site, which is linked in the description. So we're going to start off with the dashboard here, and this is a very basic dashboard. You have your property address and information along with a summary at the top, and you have a picture off to the right. And then we go over our investment timeline, so it gives you the date of the purchase, when the renovations are finished, when it's stabilized, when the refinance occurs, and the sale date. You also have rent and operating information for year one, the first 12 months where the property is stabilized, and the forward 12-month information at the time of sale. Below that, we have the property returns on an unlevered and levered basis. We have the debt information over here. Then we give a quick description of the waterfall and the limited partner and general partner returns based on this waterfall. And then to the right of that, we have a very basic sources and uses. So I can build a more comprehensive dashboard that includes dynamic charts and graphs, as well as sensitivity tables if you're interested. But for this template, I think this gives a good amount of information. Next, we're going to go on to the renovation budget. This is a simple renovation budget. We have the option to input the common area renovations, unit renovations, and any other renovations you might have. So you can list the line item, you can list the start month and the end month, as well as the budget. And then this allocates the budget straight line through whatever start and end dates that you determine. So for this first item up here, you have a start date of month 1 and end of month 12. So we're just dividing this 200,000 by 12 over months 1 through 12. And that's how that's calculated. So at the bottom here, everything is added up. And then on the Pro Forma tab, if you go down to the renovations, it is shown here. So this is pretty simple. I can make a much more complex one if you're interested. I can include functionality for a normal distribution instead of the straight line. And I can also have it adjust the calculations based on actuals that you input. So the Assumptions tab here is where you're going to input most of your assumptions. At the top, you can enter in the purchase assumptions, so the date, purchase price, and closing costs, and then the sale assumptions, the sale date, the closing costs. The sale price is calculated automatically based on the cap rate you enter and the forward 12 NOI. The only kind of confusing part of this tab is the rent assumption, so I'm going to go over that. You can enter in up to 5 unit types, enter in the total number of units, the number occupied, then it automatically calculates the vacant number. You can input the average square footage, and then you can input the leased rent. So this is all fairly simple. But once we move on to these tabs to the right, it gets a bit more complicated. Because this is a value add model, the goal is typically to renovate these units to achieve a much greater market rent. So over here in market, you can put in what your market rent's going to be after renovations. So over here, you can input whether you're actually going to be renovating these units and if you want to move them to market. If you don't, you can just click no, and the leased rent is just going to be growing at these rates that you determine here. If you do plan on moving it to market, then over the period you specify here, this leased rent is going to be growing until month 25, where it will meet the market rent. And this is all calculated on this rent schedule tab. So if we go back to assumptions really quick, you can see that we have all of these being moved to market in month 25, and the calculation begins in month 1. So if we go back here, we can see that these leased rents are all lower than their corresponding market rents until we get over here to month 25, where they meet up. And then for the remainder of this, all of these leased rents are going to equal the market rent. So that's how the move to market works. And then lastly, we just have the stabilized occupancy and the net lease pace. So these occupied units are all going to grow by 0.5 per month that we've entered until we get to 93% of the total units. And all of these calculations on the rent schedule get calculated down here into the gross scheduled income, gain or loss to lease, and the vacancy loss, and this feeds onto the pro forma. And those are pretty comprehensive calculations. I put them off to the side on the rent schedule, so you don't actually have to worry about them too much. You just need to enter in all of the information on the Assumptions tab, and it'll get calculated for you. But aside from this, everything's pretty standard. We just have our rent gross that I mentioned previously, where we have our market rent and lease rent. You can set it for all 11 years that this can go up to. You have the free rent that you can set as a percent of the gross income. And then we have our revenue, expense, and CapEx assumptions. You can enter these in as an annual amount. So you can enter up to 4 revenue, 4 CapEx, and 8 expense items. And then you have the management fees down below. A lot of times I'll adjust these assumptions where you can set values for non-stabilized and stabilized, or I'll make the amounts variable based on the occupancy. I can also make comprehensive tax adjustments, so when a sale occurs, these will adjust properly for the new property value. But for this base template, this is a pretty good way of doing things. Then below this, we just have our growth rates for the revenue, expense, and the CapEx. So our pro forma, we've already gone through pretty quickly. I just list the occupancy up at the top, then get our NOI, break out our renovations and CapEx, include the purchase and sale, and then from that, I break out the unlevered cash flow, as well as the unlevered IRR and equity multiple. And this only includes cash flows through your sale date, so if you go to the assumptions, you can see that we set this for 9/30/2033. So if we scroll all the way over here, we can see that the cash flows only go through here. The NOI calculates out for another year because we need to get the forward 12 NOI in order to figure out what our sale price is going to be. And these total values over here are dynamic, so they're only going to go through the actual sale date. So now let's go back over here. We can see after the unlevered cash flows, we show our loan information, and then from there we get our levered contributions, distributions, cash flow, IRR, and equity multiple. And then below that, we list out the GP and LP returns. And this information comes from the 2 tabs we haven't gone over yet, which is the Debt tab and the Waterfall tab. The annual summary, that's just the pro forma shown on an annual basis, nothing too fancy here. The Debt tab, I've included the ability to put in perm financing at the beginning of the investment, as well as the option for one refi. And I could alter this tab any way you would need it to have multiple loans, floating rate debt, mezzanine debt. I could adjust the refi amount to be based on a new valuation for the property. And I can also include loan covenants and adjust based on these. But for this template, we're keeping things simple. So you can enter in the loan information. These are going to be for fixed rate loans. You can enter in the amount funded, the funding date, payoff date, and the total loan term, as well as the fees and any IO period you may have, as well as the interest rate and amortization. The refi is automatically set to be for the amount that is left over on your prior loan. At the time of payoff, you can adjust this to be whatever you want. And then the payoff date is always set to be the sale date. So these are pretty simple. You have the original loan being calculated, the refinance loan being calculated, and then the total of both of these being calculated down here, which is fed to the pro forma. Lastly, we have our Waterfall tab. This is an IRR waterfall with 2 hurdles. And it's compounding instead of cumulative. So you can set over here if you want your last hurdle to be hurdle 1 or hurdle 2. Up here you can set the GP equity, and the LP equity is calculated off of that. You can set your hurdle, and then you can set the cash flow split for both of these hurdles. And once you do that, the returns for the general partner and limited partners are calculated out here, and they're fed onto the pro forma tab. This is very simple, just a 2-hurdle IRR waterfall. I can do any structure you might need for your specific deals. So if you need IRR or equity multiple hurdles, if you need multiple hurdles, if you want cumulative or compounding, I can implement promote crystallization, GP catch-up, clawbacks, pretty much anything you can think of. But the 2-hurdle IRR structure is pretty common, so I just included that for this template. But yeah, that just about covers everything. We've gone through the waterfall debt, how this all feeds to the pro forma, how we do the move to market for the value add and how that's calculated on the rent schedule, and then where we entered in the renovation budget and how all of this feeds onto the dashboard. If I missed anything or you think I got anything wrong, please let me know in the comments. Also let me know if you have any questions on this. Thank you for watching, and I will see you next time.